Good morning, everyone. So, today we are going to talk about monetary policy. Now, when I say monetary policy, first we need to understand what is exactly monetary policy. So, monetary policy is a set of tools that are used by central bank of any country to control money supply within the economy and also to promote economic growth. Now, this particular objective of controlling money supply within the economy and controlling economic growth can be done by the Central Bank of India either by changing the interest rate or by changing the bank reserve. Today, we are going to talk about the monetary policy of Luxembourg. Now, within Europe, there is European Central Bank, and each of the countries of the Europe has their own central bank, like in case of Luxembourg. Before going to the monetary policy, let's understand about Luxembourg first. Now, the capital city of Luxembourg is Luxembourg City and has a population of over 630,000 people with a total area of over 2,500 kilometers square, and their currency is euro. Now, when I talk about Luxembourg, first, it's very well known for its financial hub because it's one of the European's leading financial center, and there are many financial institutions which has its place in Luxembourg. Also, Luxembourg is the European headquarters for many institutions. In Luxembourg, we see that there are global investment coming from across all major countries, specifically in form of FDIs, where the people invest over here because they know that Luxembourg is in the heart of Europe. Also, they have a very skilled workforce followed by multilingual population. It has a diverse economy. Apart from being the financial hub, they are also well known for steel production, logistics, information and communication technology. And also, they have a very high standard of living because its per capita income is really very high and consistently ranks high among the top countries. And also, it's high in terms of standard of living. Also, it's a multicultural society as well because there are foreign nationals who are staying over here. People come in this country across the world to build their career. Next part talks typically about what are some of the key economic indicators the country is really good in. First, the gross domestic product. In terms of gross domestic product per capita, Luxembourg has a fairly high share and it's one of the wealthiest country in the world. If we talk about the inflation rate, it is at a moderate level. It is not a very high inflation rate in this specific country because the government and the central bank closely monitor the inflation to ensure price stability and economic growth. In terms of unemployment rate, in Luxembourg, the rate of unemployment is fairly low when we compare this with the other European countries. And also factors affecting the unemployment in Luxembourg include, fluctuation in economic activity, labor market dynamics, and government policies aimed at promoting job creation and workforce participation. But in this case, the government as well as the central bank of Luxembourg monitors the situation thoroughly and makes sure that the unemployment rate is as low as possible in the country. When we talk about the overview of the Central Bank of Luxembourg, which is also known as Banque Centrale du Luxembourg, which was established in 1998. Now, the Central Bank of Luxembourg implements the policy or the objectives which are set by the European Central Bank and the Euro system. In terms of the BCL, is also responsible for issuing Eurobank notes and currency within the Luxembourg to ensure smooth circulation of money within the country. The BCL oversees also the other banks which are present within Luxembourg, in terms of contributing to the stability and integrity of the financial system. In terms of managing reserves, BCL manages Luxembourg's official foreign exchange reserves and participates in international financial corporations. The BCL, which is also the Central Bank of Luxembourg, is an independent entity and it's free to take their own decision. This independence is crucial for ensuring the effectiveness of the monetary policy and maintaining price stability. In terms of governing structure of the Central Bank of Luxembourg, the directors, specifically the board of directors, consisting of members are appointed by the Luxembourg government. The board is responsible for setting monetary policy objectives, managing bank's operations, and safeguarding its financial stability. In terms of participation in Eurosystem, the Central Bank of Luxembourg also collaborate with the European Central Bank and the other national central banks in terms of implementing monetary policy for the Eurozone. In terms of international cooperation, it participates in different international forums, discuss about the monetary policy and the financial regulation. This engagement fosters cooperation with other central banks and contributes to stability of the global financial system within the country as well as the European nations. When we talk about the role of central bank, specifically in terms of formulating and implementing monetary policy, they basically set the monetary policy in alignment with the European Central Bank. Also, it helps in monetary policy formulation as well because they participate in formulation of monetary policy strategies and decision. This involves analyzing the economic data of the country, assessing the financial market conditions, and also evaluating the outlook of inflation and the economic growth. In terms of implementation of the monetary policy, few of the tools which the central bank use are open market operations. In case of open market operations, the Central Bank of Luxembourg conducts transactions in financial market to influence the liquidity in the banking system and adjust short-term interest. So they basically pump in more money in the market in order to infuse liquidity in the system. Also, in terms of reserve requirement, which is another tool, the Bank of Luxembourg specifies the minimum amount of funds they must hold in reserve against their deposits. Also, the discount window operations, specifically in this particular tool, the Central Bank of Luxembourg provides emergency liquidity to bank through a discount window, helping to stabilize the financial system during the times of stress. Again, through deliberate means of infusing money, the government is trying to increase the liquidity in the market. Lastly, we have forward guidance as well, which is one of the tools used by the Central Bank of Luxembourg in terms of communicating its policy intentions and outlook for the economy to financial markets and the public, influencing expectations about future interest rates and economic conditions. Also, they try to maintain the communication as transparent as possible and they try to publish their decisions and outlook through public statements, press release, publications, providing clarity to financial market, business, and public. In terms of primary goals of Luxembourg's monetary policy, the first and the foremost important thing is price stability. Now, as I have highlighted earlier, uh, Luxembourg has a fairly moderate inflation rate, and this is possible because the Central Bank of Luxembourg is taking strict measure in terms of maintaining price stability. The price stability is crucial for preserving the purchasing power of the currency, promoting economic certainty, and facilitating long-term planning and investment. Next is the economic growth. Through implementation of monetary policy, we are trying to achieve high economic growth. Economic growth is very much essential for improving the living standards, reducing unemployment, and fostering prosperity. Monetary policy measures such maintaining accommodative interest rates and ensuring adequate liquidity in the financial system so that it can stimulate investment, consumption, and economic activity within the country. Next is the full employment rate, or the full employment, that is the aspiration of any government or the Central Bank of Luxembourg. Now, the low unemployment contributes to social stability, reduces income inequality, and enhances overall economic welfare. The monetary policy measures that support economic growth and stability can indirectly contribute to achieving fuller employment over the medium to long term. Though Luxembourg has a fairly low unemployment rate, the Central Bank of Luxembourg is doing fairly well in terms of having full employment. While price stability is the primary objective, Luxembourg's monetary policy aims to strike a balance between price stability, economic growth, and employment objectives. Now, based on the analysis of recent monetary policy decisions and their outcome in Luxembourg, we talk about the interest rate policy. Now, for the interest rate policy, we see that recent monetary policy decisions might involve changes in policy rates, such as deposit rate, main refinancing rate, or marginal lending rate. Lower interest rate can stimulate borrowing and investment and support economic growth, but potentially leading to higher inflation. Conversely, raising interest rate can cool down an overheating economy but may also dampen the economic activity. So we see a balance is very much required, and our monetary policy will help us to maintain this balance within the economy. The next important thing is quantitative easing and asset purchase. Now, the central banks sometimes engage in the quantitative easing method, purchasing government bonds and other assets to inject or infuse liquidity within the financial system. And analyzing the recent QE programs in Luxembourg would involve assessing their impact on the financial market, borrowing costs, and economic activity. In terms of forward guidance, central bank provides this forward guidance on their future policy intention, which can influence the market expectation and the interest rate dynamics. Also, this have impact on economic indicators. Now we see that based on the monetary policy decision, their effects on key economic indicators such as inflation, GDP growth, and unemployment have a key impact based on the tools that we are using for monetary policy. For example, lower interest rate might lead to higher inflation and GDP growth, but could also contribute to asset price inflation. Conversely, raising interest rate could help contain inflation but might also slow down the economic growth. The financial stability consideration that we have to take in account of, because at the end we need to have a financial stability within the system. If there is no financial stability, then there can be a high inflation or a deflation. That's why financial stability plays a very important role in order to mitigate any kind of risk. In terms of forward looking assessment, we see that the potential adjustment in response to evolving economic condition, external risks are very much necessary in order to have a proper assessment in place, so that if any risks are coming, we can easily mitigate the risk well in advance. When we identify some of the challenges and risks faced by Luxembourg's monetary policy, we see that there is limited monetary policy autonomy. Reason being that there are good amount of power from which is held by the European Central Bank, because the Central Bank of Luxembourg has to follow the objectives given by the European Central Bank. limiting the country's ability to pursue independent monetary policy measure tailored to its specific economic condition. We have open economy vulnerability as well in the system because the country has a small and open economy and is highly connected with the global market, making it vulnerable to external shocks such as changes in global trade dynamics, the geopolitical tension that we see nowadays, and also fluctuations in the commodity price. There are financial sector risk as well because Luxembourg is known for its financial sector hub. Okay, and if there are significant risk involved in terms of cyber security threats, regulatory changes, and challenges related to money laundering and illicit financial activities, it will definitely uh, increases the risk within the economy. Ensuring the resilience and the stability of the financial sector is crucial for maintaining the overall economic stability within the country. The housing market dynamics also plays an important role. Now, when we are reducing the interest rate, there will be a housing market dynamics and the price of the houses will potentially go up because easy money is available in the economy. Now, Luxembourg has experienced rapid increase in housing price in the recent years, which has raised concern about the housing affordability and also the potential for housing market bubble within the economy. Monetary policy measures such as low interest rate can contribute to housing market imbalances and pose threat to financial stability. We also have demographic trends in place, which is characterized by aging demography in Luxembourg and a significant proportion of foreign residents who are coming to Luxembourg for career opportunities. The demographic trends include the labor force dynamics, the immigration patterns, and pension liabilities, which can have a key impact on the economic growth. We also have economic divergence with the Eurozone because economic disparities among the Eurozone member state can complicate the effectiveness of the common monetary policy measures for the country with different economic structures, growth trajectories, and policy preferences. Luxembourg's monetary policy may need to navigate divergent economic trends and externalities within the Eurozone. The future direction of Luxembourg's monetary policy, which is a very important area to discuss about. We have alignment with the ECB policy. There are significant alignments that is there with the European Central Bank, which the Central Bank of Luxembourg needs to follow, and they have limited choices to implement monetary policy by their own. We see that they adhere to the common monetary policy framework set by the European Central Bank, including the objectives of related to price stability and supporting economic growth. In terms of interest rate policy, we see the future trajectory of interest rate in Luxembourg will depend on the economic condition, the inflation pressures, and the ECB decisions. In terms of quantitative easing as well, Luxembourg may continue to benefit from ECB's quantitative easing program and asset purchase initiatives aimed at providing liquidity support to financial markets. It also monitors the evolution of these programs and their impact on financial stability, and inflation will be essential for Luxembourg's monetary policymakers. The financial stability we have to consider given that Luxembourg is the financial center, and this will actually help to mitigate the risk. We not only focus on finances and investment, but it has to be sustainable finance and green investment. There is an increasing global attention on sustainable finance and green investment as a part of the effort to address climate change and promote environmental sustainability. Now, the monetary policy may incorporate consideration related to sustainable finance and how we can encourage investment in environmental friendly projects that will play a key role in order to maintain sustainability within the economy. The digitalization and financial innovations in place which are happening in today's world That also needs to be within the regulatory framework so that threats or cyber securities are strictly within control. Also, in terms of collaboration and international cooperation, the Central Bank of Luxembourg definitely, collaborate with the other central banks and European Central Bank to design different policies, to create financial regulations, and also economic surveillance. The main emphasis on the importance of monetary policy is maintaining economic stability. In terms of, we have highlighted earlier, in terms of maintaining the price stability, which is the key thing for any monetary policy, followed by supporting the economic growth so that it has high employment rate within the economy, maintaining a financial stability within the economy so that there are no threats to the economy in terms of finances or no major shocker the economy receives, that we have to take care of. And the exchange rate stability, which plays a very important role. The monetary policy conducted by the European Central Bank helps to secure exchange rate stability, reducing currency's volatility and exchange rate risks for business and household. A stable currency environment fosters confidence and promotes international trade, followed by confidence and predictability, because predictability is very much important to predict what is going to happen in future. So the government needs to design monetary policy in such a way to reduce uncertainty and promote financial stability within the economy. And as we wrap up, just want to conclude by saying that monetary policy is a very important aspects and and a major tool, which and also it's a major policy specifically which uses the different tools given by the central bank so that we have economic stability in place. We need to have price stability so that we can keep a check on the inflation, followed by economic stability, which we need to maintain within the economy. Reducing the interest or increasing the interest rate doesn't solve the purpose. There has to be a balance in between, and that's how the economy will also stay in balance. And the central banks of the country is aiming to have this checks in place to remove any economical imbalances and also to keep the economy safe and secure. Thank you.